welcome. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Dsouza.
Good morning. I'm Agam Vakil, and here are the top headlines at this hour. Indian equity indices advanced as traders cover yesterday's short positions, but India Volatility Index falls. An open interest in Voltas and Kajaria Ceramics surges as traders take fresh positions in their respective futures. But Bombay Dyeing hits an upper circuit of 5% in opening trade as investors cheer good earnings. Tata Motors, HPCL and Aurobindo Pharma are three of the nifty companies coming out with their earnings today.
All right, let's take a look as to what's happening in the futures and options market. Well, some positive takeaway that the volatility after 3 sessions has cooled off today. The India VIX is trading with cuts of almost 6% right now, so below the mark of 13, sitting very comfortably around 12.76. Positive start for our Indian markets as well. Nifty trading with gains of almost 50 points at levels of 10,357. Bank Nifty will be in focus as the Bank Nifty weekly contracts expire today. The range that if you can see from the options data in terms of highest call as well as put base, it seems like the expiry can happen in that range of 25,000 to about 25,500 on the upside. The Bank Nifty currently is trading above that mark of 25,300. Well, both your benchmark indices have been trading above the key moving averages, be it 20 or 50 moving average. Yesterday, when the market was seeing a major sell-off, it still was trading above its 20-day moving average. In terms of today's options activity as well, if you look at the data, the 10,400 put has finally once again become active. If you look at that strike, it's added over 2 lakh shares so far, whereas if you look at the 10,400 call, that's also added about 1.5 lakh shares till now. The range remains same, and the first level which the market will be eyeing for on Nifty on the upside has to be the 10,500 mark. In terms of what the institutions are doing, well, the FIs, they've been buying in the cash segment for this month, but if you go by the futures and options data, they've been reducing their long positions in index futures, and clearly they've been hedging themselves if you look at the options data. So far they've bought more of puts and they've written also more of puts if you go by the options data.
And Navneet, as one might expect, a lot of these stock futures out there are buzzing on back of earnings. So of course Voltas is one of them, and we also have a lot of increased interest in the likes of Kajaria Ceramics. So if you can pull that list of stocks which are looking at a substantial increase in open interest, you see that Kajaria Ceramics as well as Voltas is right at the top. Of course, we're looking at a change in IGL, but that is, of course, a corporate action. That's the reason why you're looking at that 384%. So we'll have to rectify that. NIT Technologies, as I was suggesting, and we've been tracking NIT Technologies over the past 6 or 7 sessions. It has seen a lot of buying interest coming in there. And of course, Hexaware is among the others, following Voltas as well as Kajaria Ceramics. Again, when it comes to unwinding, we unlikely see too much when it comes to the unwinding quest. But let's cut across to Neeraj Shah, who is in conversation with Dharmesh Mehta, the MD and CEO of Axis Capital, from the sidelines of the Axis Capital conference. Well, Neeraj, is to you.
Yeah, till now. Next year expected another 15 billion with divestment.
Wow.
That's the overall market.
Overall market. Yeah.
Thank you.
Well, thanks for tuning in. We are present at the Axis Capital India 2020 Stars Conference, and yes, it's a conference full of stars, a bunch of corporates out here. But to talk more about the conference, the mood at the conference, and what is the message that the Axis think tank is giving out to investors and maybe even corporates alike. I have the top think tank with me here. They need no introduction, but Dharmesh Mehta, MD and CEO at Axis Capital, just to get the designation straight. Salil Pitale, MD and Co-Head Investment Banking, Axis Capital, and Ashish Nigam, Executive Director, Deputy Head of Research at Axis Capital. Gentlemen, thanks so much for joining in.
Good morning.
Dharmesh, not a bad time to do a conference, right? You are perched at new highs. Investor confidence in India is not waning. You couldn't have asked for more.
Yeah, it's perfect timing, and luckily from last 11 years, we were able to time this to perfection. Last year, if you remember, it was demonetization time. So actually, we landed exactly after few days after demonetization. So there's a lot of excitement and nervousness to understand what's going to happen. This year, now we're discussing the same thing which happened last year. And yes, the markets are doing well. The IPO markets are done fantastically well in the last 2 years. The investors are bullish on India. Money flow is still on. Domestic liquidity is great. So I think that yes, we got it the timing right once again.
Yeah, and the beauty about doing a conference after a 30% rise from the demon lows is something quite special as well. Yeah. The question is, when you talk to investors now and people who are coming in, if not for the first time, then after a brief hiatus back to India and talking to you about or kitna dega market, I mean, how do you justify these valuations? What do you tell your investors? I'm sure they all know their numbers, but they're still seeking for a bit of number crunching, some bit of view on India over the course of the next 12 odd months until the next conference. What do you guys tell them?
So India is like half glass full, half glass empty currently. Because we had this demon and the GST impact in the last 1 year, no other country would have survived these two shocks in the same year. So in fact, the benefits of both these events are going to actually play out in the next 2 to 3 years. And that's what investors are looking for, saying that you had the worst possible period in the last 1 year when you were impacted, and still you've grown so much. Imagine what happens when all the initiatives starts kicking in.
Yeah.
So despite this whole 30% rise, I believe people think that there's going to be enough upside. Yes, you may not get the 30-35% return which you got in the last 1 year, but even if you're able to make 15-20% return, I think the investors are definitely going to bite it, because there's no other avenue where to go and invest to make that kind of money today, and that too with a lesser risk.
Yeah, and the macros are improving. We just did some number crunching today about how the credit growth has started to pick up as well, compared to the earlier stance of only deposits moving up. Now, before we get to the flavor of the conference, you can't ignore, Salil, one thing. And guys, just feel free to come into every question. But Salil, you can't really not talk about the one thing that has happened over the last 6 months, is that the markets and the flows have digested every single large issue, large QIP, and the lock-in periods getting over for a bunch of previously companies, and still managed to wade through all of these.
Yeah, I think you should, I see that in the perspective that the amount of money that's come post-demonetization into India from the Indian markets itself. So we just the last count data points in terms of domestic flows into the Indian industry is about 98,000 crores. That's more than double of what FII flows have been. The FII net flows have been about 42,000 crores. So that's the kind of money that's come out from the domestic mutual fund industry, and the FII has not been as strong as one would like to believe. Now, all of that money is on the back of the fact that India has moved into more financial savings in economy compared to what it was. Money's come out of closets and into the banks, and then flowed back into the system and mutual funds and so on. I mean, we were on the roadshow when doing the deal for Reliance Nippon Asset Light Management, and when we went after that on the roadshow, we realized that the amount of money coming in SIPs through the smallest of towns in India is extraordinarily high. Extraordinarily high. So I think all of that is channelizing into the kind of inputs that are going in for some of the deals. And last year we did about 17 IPO transactions in the last 10 months of time, which is an extraordinary record for ourselves. And a lot of these were large sizes. The amount of money that we've raised in these IPOs is in excess of 45,000 crores. And these deals have gone through extremely well. So I think it's a function of the fact that there's enough money supply into the system, there's quality paper, and wherever the paper is also well priced, there is a strong response for that paper itself.
Yeah, and you guys are present everywhere, right? We talked about some statistics as well of the money that has been raised this year. I mean, you've been virtually there in almost all of the large deals as well. Any thoughts there before we move on to the conference, Tamesh?
Sure. So Neeraj, also I always say, and I believe very strongly, that it's the supply which brings in demand. The demand doesn't bring in supply.
Okay.
So as and when there's supply coming in, you get all the investors start coming and looking into the stock or the country or the specific sector. So earlier, the problem in the last, maybe before 2 years was there is not enough supply coming to the markets, and people are not able to invest in new businesses. So if you see from the last 3 years, the amount of new businesses which have come in, like as earlier avatar of Inam and now Axis Capital, we always brought new industries to the market. And this time in the last 2 years, the amount of new industries which have hit the market is phenomenal. And that's what people are waiting for. And that's why some of these industries or some of these companies are getting some crazy valuation, because people want to invest, but earlier they were not able to invest. Obviously, those sectors will mature on a period of time and the valuations will become reasonable. But if you're asking me, is there enough demand for it? You get me more supply, I'll get you as much demand as you want.
Wow, yeah. Insurance may be the poster boy, but I'm sure a bunch of other sectors have created, and maybe that makes the job difficult, right, Ashish? I mean, there is only as much paper that you can track, as many companies that you can track. But what's the theme of this conference, and is this theme tying in with all the recent reports that you've given out? Because I was looking through all the Axis Capital research. We do that at BQ very closely. You guys have been selectively bullish on consumption, selectively bullish on exports. Is that the theme at the conference as well?
So it's not really the theme of the conference. So one thing that's playing out in terms of earnings. So this year, FY18, you have, let's say, around a 10% growth in earnings for the overall market. And right now it's sector specific. You have banks which are contributing, mainly the private banks and NBFCs. You have autos, you have metals, you have basically global commodities. But there are a lot of sectors which haven't contributed. Luckily from FY19 onwards, the growth picks up and the growth is more broad-based, which is why this conference also is not focused only towards one sector. It's a bouquet of sectors, and because of all cylinders firing in FY19. So which is why there's no sector preference or sector dislike going into FY19, and that's the theme of the conference. We have the who's who of every single sector at the conference.
Yeah.
All right, some views coming in from Axis Capital, but let's shift focus back to the F&O show and welcome our F&O experts for the day. Kunal Sarogi of Equity Rush and Ashish Chaturmota of Sanctum Wealth joins us on the show now. Good morning to both of you, gentlemen. Well, let's get views on the benchmark index first. Ashish, let me come to you. As usual, whenever we chat, it's the Bank Nifty weekly options expiry. You happen to be here every Thursday. Where do you see the expiry taking place today?
So, hi, morning. So I think, Bank Nifty looks quite interesting, has seen build-up of almost 4% today, and, we have seen a good amount of, up move today. So I think can see a good amount of short covering, which can take it towards 25,500 to 25,550 levels. So I think another 100, 150 points uptick from these levels can be seen in Bank Nifty, and I think PSU banking basket might see a good amount of, pullback from these levels. So within that, I think SBI, Bank of Baroda, PNB looks good for another 2 to 3% upside from current levels.
Kunal, today's day of trade has seen some amount of increase in open interest when it comes to the 10,200 and 10,300 puts, and very little action in calls for that matter. What do you make of this, and what is your view when it comes to the benchmark indices, say over the next 3 or 4 days?
Well, I think markets are in a range. If you look at the overall short-term charts for the Nifty, I see a very clear range between 10,400 and 10,300. So I think going forward, markets are likely to remain hemmed between these two very critical levels, and they might actually take a while before it actually snaps out of this. If it were to go below 10,300, the next major support for the Nifty is around 10,150. So you would see a slightly more substantial correction in case markets break 10,300. So I'm closely watching these two levels, 10,400 on the upside and 10,300 on the downside. And we are trading somewhere in the middle of those two.
Okay, 10,400 on the upside and 10,300, which Nifty actually breached in the last half an hour of trade yesterday, but managed to close above that mark. Let's get going then and get you some option strategies for the day. Ashish, what are you betting on?
So as far as options is concerned, see, it's a very dull market, and I think it's going to be range bound. But the good part is that yesterday we sustained 10,300 mark, and today we are much higher above those levels, which is a very important level. As Kunal was mentioning, yes, 10,300 was a very, very critical support zone. Considering the data also, we saw yesterday a huge amount of call writing at 10,500, 10,600. At the same time, there was a huge short covering in put writing at 10,300 to 10,200 levels. So if this 10,300 levels would have broken today, we might have seen a sharp cut till maybe 10,200 odd levels. But since we have sustained this and we are much above these levels, I think keeping that in mind, 10,300 will act as an important support. But simultaneously on higher side, 10,400, 450, you might see a lot of resistance coming in. So ideally, I think markets are going to trade sideways, and we are not going to see any significant activity. Considering that in mind, I think one may look for writing a short straddle at this point of time of 10,400 call put option. But if you look at the VIX, which is again at a very low level, you are not getting a right kind of premium to write that kind of straddle. But yes, if someone is compulsorily trading, then a short straddle is recommended at these levels.
It's important that you mentioned the VIX, which has fallen by as much as 6%. So Kunal, if I were to come to you on this one, would you also go ahead and short something like a straddle or a strangle at these levels, considering you are also expecting some amount of consolidation on the benchmarks?
Absolutely. I think to actually do that, and I think if you sell the 10,400 put and probably the 10,300 call, I think for a combined premium of around 300 rupees, I think makes a lot of sense to actually do that. And if the markets were to stay in the range for the next 4 or 5 days, you would see substantial shrinkage in those premium. and that would accrue to the strangle seller. So I think makes perfect sense. I would agree with that.
Okay, let's also talk about the active stock futures then in today's session. Well, Indian Bank is the one which has seen significant price action in today's trade. Let's just pull up Indian Bank. The underlying has been trading with gains of 7.5%. Clearly, there has been action on the future side as well, as the open interest is up nearly 9% there. Kunal, at these levels, Indian Bank have been observing in the past few sessions has been witnessing good amount of open interest addition after there were bouts of profit booking, but the stock is back into action. Would you recommend any sort of trade here?
If you're a trader, yes, I think you could look to buy Indian Bank. The kind of momentum it's got going for itself. I think the stock might actually get to 410, 420 levels in the current move. Remember, this is an outperforming PSU banking stock. After the big gap up in almost all PSU banks, most of them have given up their gains. But this is a stock that has actually held on and is now building upon it. So I think stock might actually get past 400, 410 could be a target. But you must be very mindful of stop losses here. Stop losses need to be at around 390 for going long.
Ashish, you spoke about the bank nifty, but are there any specific banking counters that you may go long or short on at these levels?
So, see, I think Bank Nifty will be the safer one to trade with, because when there's a base formation, what you will see is one stock going 2%, again it will consolidate, the other will start taking an action. So it will be in a consolidation phase, but by that time you might see 100, 150 points uptick in Bank Nifty. So I think ideally Bank Nifty makes sense. On downside, I think 25,300 should be kept as a stop loss. 25,600 could be looked as an immediate target in Bank Nifty.
Okay.
How's the HUL looking, Ashish? The stocks had a gap up opening today. It's been maintaining those gains of 2%.
I think Ashish also has a call on HUL as a strategy. But yeah, please go on and explain.
So, Agam, I would like to comment before coming to HUL. At almost 1 month back, we recommended Nestle as a buy. And that time it was trading around 7,000 levels. And today it is almost 800, 900 points up from those levels. So for a stock like Nestle to give that kind of upside is something very, very difficult. And same kind of structure is what we are observing in Hindustan Lever, where we have seen a significant addition in terms of open interest position from the levels of 1170 to 1280. Then stock consolidated for almost 2-3 weeks, and now today we have seen a gap up opening, so clearly indicating that a next round of up move might start in the stock, and which can take it positionally to 1340, 1350 levels. However, in a very short term, one can expect a target of 1300 to 1310 with a stop below 1255. But I think positionally Hindustan Lever is poised for 100 points up move from current levels.
Okay, so that's your call on HUL, but the other stock which is doing reasonably well in today's job trade is Voltas. Now, that stock has gained because we're looking at very good earnings, and because of that, we are looking at a surge of as much as 14%. It's tempered off, it's come off from days highs. It's currently moving up by as much as nearly 1%, but for now, currently trading at 562. Kunal, do you have any call on Voltas, considering we are looking at a surge in open interest in today's job trade? This is mostly likely to do with the earnings.
I think the stock needs to get past 570 before I think I'd look to buy it afresh. If you already got Voltas, I think one could safely hold on. It's because I think it's got very robust support for itself at 553 odd. But as long as there is no price breakout, I think one should wait and watch. It's because 570 to my mind is a major resistance for this one.
Okay, 590 is the resistance on the charts for Voltas, a counter which has seen good amount of open interest addition in today's trade. Well, it's that time of the show when we address our viewer queries, and the first query for the day comes from Tushar Falak. He's asked for advice on Bharti Airtel. He's got 2 lots of November 500 call strike, which he's purchased at a premium of almost 14 rupees. I don't think there is any change in terms of premium. If you could just pull up the 500 call strike, that's the option strike, it will just come up on your screen. Ashish, this is the counter which has been active in the past 1 to 1.5 months, but there are days, when we see that profit booking, suddenly somebody will feel, okay, this is the time to enter. What do you think he should do? 500 strike, the premium is still around 13 to 14. Do you think he should just, stay put here? Yeah,
I think he should stay put here, because the reason being, yesterday there was a block deal and there was a shift of, a few percentage of holdings from one end to another end. That's the reason you saw some, profit booking in last 3-4 trading sessions. But I think now it is near a strong strong support zone which is around 490, and I think once it crosses 505 you might see immediate action coming into the stock, and stock might see a move till 525 530 zone. So he should continue holding on to his position. I think he should keep 8-9 as a stop loss on downside in this call option, and he can expect this premium to rise from 14 to maybe 26-27 on upside.
All right, moving in, we have another Facebook query, and this one comes from Harshad R. Prabhu Desai, and he wants to get an idea on the trend for India cements. Now, again, it's been a largely volatile counter, but if you consider the way it's moved over the last 1 month, we have seen very little. In fact, it's declined by as much as 3.3% in the last 1 month. Even today, the stock is up only 0.8%, and the open interest has looking at a decline of as much as 1.5%. Kunal, can you help Harshad out with India Cements? Is there a trade at all in this counter right now?
Well, I think the stock is in a range, and the range is quite substantial. This has always been the feature with this stock. The stock tends to move in ranges, and those are very substantial ranges. The current range is between 170 and 195. So I think you would do well to actually accumulate the stock around 170, 175. And if you hold it long enough, I think you will see 190, 195 again on the stock. And that I think would be a good place to exit. So there is no secular uptrend here, but it's more like a range. And if you can play the range deftly, I think you might actually make some money.
Well, India Cements will also be reporting its September quarter earnings today, where the profits are expected to come in at about 15 crore. That's the Bloomberg poll which is throwing about, which is almost a downtick of 75% if you look at that figure on year-on-year basis. I guess Harshad also has a query on Bank of Baroda. He wants a view there. Ashish, would you like to help him?
On Bank of Baroda?
Yeah.
So I think PSU as a banking basket looks quite interesting, and yes, within the large cap PSU banks, I think Bank Baroda is one stock which has seen a decent amount of consolidation in last 1 week after that historic day. So I think now poised for a move towards 174.75. For this move to go right, I think on downside he has to keep a stop around 161 levels.
All right, moving in, over the past couple of days, we have been getting some queries on the technical indicators that our experts like to use, especially when it comes to the futures and options space. So, Kunal, I'm going to come to you on this one. Do you want to name any technical indicators that our viewers may want to go ahead and study later on that you use when it comes to trading specifically in the futures and options space?
Well, I think futures and options trade typically are very short term. So what one needs to bear in mind is that what chart periodicity are you looking at? So if you're a short term trader in derivatives, I think the ideal time frame should be a 30-minute or a 15-minute chart. Those are easier to look at, and you get better signals out of them. The indicator that I like most, or that a beginner trader could actually look at, is RSI. It's got fabulous returns. It's a great indicator if you use it right. Particularly RSI divergences, I think, are very, very effective on the charts. Divergences are when RSI and price are moving in two very divergent directions. You see price going up and RSI going down. That is the place where you can actually make a trade. So those trades are very effective.
All right, so RSI is the indicator which Kunal is suggesting for every beginner in the futures and options market should study that. But Girish Kumar has written to us on Facebook. As usual, Agam, he wants some money-making ideas. Girish, we hope you're watching our show. I'm just going to go to our guest and get you some trading strategies. So you choose your pick from there. Ashish, what are you recommending today?
So 2-3 ideas which I have is, first one is Tata Elxsi. We recommended it earlier also.
He already took a call, I guess, because he wrote to us yesterday. He was asking if he should book profits.
Too, if I'm not mistaken.
870 was the level I think he bought around it.
So I think still he can buy, and now 870 will become a stop loss rather than, so I think keeping that in mind, the stock has a potential to test 930 and 950 on upside in a very short span of time. Has seen decent amount of open interest in last couple of trading sessions, and once we see this is just consolidation which is happening at this point of time, and if it manages to sustain this 870, I think a move till 930, 950 can be seen in next couple of trading sessions in Tata Elxsi. Apart from that, Hindustan Lever is looking very, very promising. As I mentioned, with a stop below 1255, one can initiate a long. Immediate target can be 1300, 1310. And one stock which I would like to add more is Reliance, which is showing very good strength, has seen a reversal on the daily charts, and now I think a move till 950, 960 can be seen in Reliance, so one can initiate initiate a long in Reliance with a stop below 895, and on upside 950, 960 could be the immediate targets.
Okay, so Ashish has given us 3 trading ideas for today and perhaps over the next couple of sessions. But Kunal, if I can come to you, one of them at least is Pidilite, which is the other one. And if you could take us through both these calls for today.
Well, Pidilite is gapped up today, and I think it's a very meaningful gap given that I was expecting for the stock to break down and go down. But it's actually turned course and has done that with a lot of style. I think the stock is headed towards 810, 815 levels. One should put a stop loss at the lower end of the gap somewhere around 771 and look for targets of about 810, 815 on Pidilite, and that I think will happen in good time. The other stock I like is Syndicate Bank. The stock has got a very, very robust chart structure. It's again an outperforming PSU banking stock that has done better than the rest of the pack. I expect the stock to get to 90, 91 levels over the next few trading sessions. One should put a stop loss at 86 and go long on this.
All right, those are the 2 strategies. Pidilite had come out with its numbers yesterday, so the stock is reacting to its strong set of numbers. We will be speaking to the management at 11:30 on trend spotting, so do tune in at that time. But I think we'll call it a wrap here. Thank you very much, Ashish, as well as Kunal, for joining us today and giving us your views in the futures and options market, and also helping our viewers with their queries.
Well, there's plenty lined up, so stay tuned into BloombergQuint. We are tracking earnings here, and JK Lakshmi has come out with a decent, steady set of numbers. But to understand in more detail as to how this quarter has been, we are in conversation with the management of JK Lakshmi, as well as Nikki also joins us. So Nikki, tell us how have the numbers been, and if you could also take us through the numbers and along with the management.
Sure, it's a mixed bag that we're looking at for JK Lakshmi. The volume growth of the first thing that we'd like to understand is about the volume growth for this year, because that's quite a steady number that we look for the cement companies. With that, my first question to you is, sir, net sales have been driven by the volume growth in this quarter. Do we expect the second half of the financial year to be better than the first half? And also, what is the kind of growth that we're looking at in the remaining half of the fiscal?
As I mentioned, in the first 6 months, we had a 9-10% growth in the volumes. In the second half, we should see slightly better based on higher demand. And overall, we should end up the year with a growth of about, if not more, at least 11-12% in volume terms.
Sure. We've seen some pressures coming in on the EBITDA performance of the company. I'd like to understand, do you expect these cost pressures to remain in Q3, especially that for petcoke?
No, I don't think there will be any easing out. We expect the price to, especially the petcoke prices, to remain firm going forward. But what we are expecting is some improvement in the realization based on the higher demand, and also the fact that now there is a price ban which is there especially in the state of Chhattisgarh, where we sell almost 50% plus production from our eastern plant. So that should ease out. So that should help us to improve the margin going forward. But we don't see any respite as far as the fuel prices are concerned.
Sure. We've seen a higher demand in the region. Are we expecting the capacity utilization levels to also go up along with the demand that you foresee in the future?
Yeah, we operated during the quarter at a capacity utilization of almost about 70% plus at the northern operation and about 80% in the eastern operation. Going forward, we would like to improve it to overall 80-85% at both the plants.
All right. The second last question that I have for you is in terms of realization. Do we expect the realization to improve in the second half of the financial year, given the pricing scenario?
Because basically what has happened, the costs have increased considerably. To maintain the margin, we would be required to push some prices. Maybe 5-6% should be good enough for us to improve the margins.
Sure. Could you also outline your capex plans for us and the cost saving synergies that would be achieved thereafter?
Presently, as I mentioned, we are operating at 75 to 80%. So once the demand improves, we can always increase our capacity utilization. We are also in the process of putting up a grinding unit in Odisha. So that should add up. Further, what we are doing, and as far as the power and fuel cost is concerned, for the eastern plant, we are putting up our two power project. One is the waste heat recovery project costing us about 90 crores. That should be operational in the current quarter. That should help us to improve the EBITDA by about 40-50 rupees. Going forward, we are also putting a 20 megawatt of thermal power plant in the eastern region. So we'll be self-sufficient by fourth quarter of next year as far as power.
Sure. The last question that I have for you is if you could just quantify, the optimization levels that we'll achieve in terms of cost per ton in the region where we are expanding the capacity expansions to happen.
We're in the eastern side at our Durg cement plant. So that should help us to reduce our power and fuel cost by about 200 rupees per ton.
All right. With that, we'll leave it at this. Agam, back to you.
Well, thanks for that, Nikki. Of course, that's JK Lakshmi for you, but we've also had earnings from Muthoot Finance, and we've had a conversation with George Alexander Muthoot, the managing director of the company. But before that, let me go across to Saloni Dhanuka, who's looked at the numbers. So, Saloni, if you can take us through the numbers and also perhaps help me out with George Alexander Muthoot.
So, well, Alex, it was a good quarter for Muthoot Finance overall, and their net interest income was up almost 50%, while the gross loan asset under management was muted. So, let's get in the management. So, good morning, sir. This side Saloni, and my first question is, let's talk about your bread and butter business first. The gold loan portfolio has been muted in this quarter. What is the reason for that, and your growth outlook there?
This quarter has been muted. Several factors are there, but generally the offtake has not been that good as expected. We don't attribute any particular reasons to that. Probably the economic factors, some little more after effects of some demonetization, some of the GSTs, all those things combined. But generally, you must also understand something. Our gold loans are for short period. So only the growth is muted, but new customers are coming, old customers are going away. So disbursements are definitely happening. But only thing is that about 200 crores of deficiency, that's just 0.1% growth has not come. But having said that, this quarter, this month, yes, we have started seeing good things. Last quarter we had Onam, then just a backlash of Diwali also almost to the end of the quarter. So all those things would have affected.
And what kind of progress have you seen in gold auctions in this quarter, sir?
Gold, there's no progress. We are trying. We are actually trying our best to reduce the auctions and retain the customers with us. That is actually the company's policy or the strategy which we have been taking in the last quarter as well as this quarter. There has been some auctions, but not much.
Talking about the asset quality parameters, it has deteriorated substantially to 4.56% as compared to 2.25% seen last quarter. So are there any sorts of worry there?
Oh no, there is no need for any worry in those cases, because whatever the NPS you see, as we are speaking today, 30% of those have already come back, and by the end of the quarter it will be fully over, and probably a new set of much lesser numbers will be there by the next quarter. So we actually consciously gave little more time to the customers so that we don't want to do auctions, and that actually is paying dividends. Because many of these customers, when they are personally contacted once more and twice, they are coming up with redeeming the gold or even renewing the accounts, making it to a new account, etc. So we are avoiding auctions. So we just gave 3 more months to these customers. That is why the NPA has gone up actually. We also had a new scheme which was just a 6-month scheme. See, it was usually the gold loans are given for 12 months. We introduced a new scheme a year back, which was the 6-month scheme. So customers got only just 6 months to close or renew their gold, which usually they were getting 12 months. So that has also affected to this increase in this technical NPA. That's what we call it, technical NPA. All these loans will get closed, are getting closed, and we will not lose any interest on this. Rather, we will only get more customer, goodwill among the customers by not auctioning their gold.
Also, can you take us through your outlook on other businesses, that is your microfinance book, housing as well as consumer finance, and how do you plan to grow the same? Also, one more thing, can you give us some segment-wise growth expectations?
Yeah, for the housing finance, we would like to end the year with 1,500 crores of portfolio, and that is on track actually. Today we have this quarter we had 800 crores, 830. By the end of the quarter, end of the year, we should reach 1,500. That is as per plan. We will be reaching there, and that's also because of some benefits in the interest reductions, etc. is showing better results as profitability also. And probably by next year or in next 2 years, we should be reaching around 5,000 crores. That's what our aim is. That's for the housing finance company. The microfinance is also doing well. It has also clocked about 800 crores of assets under management, and their PAR is also very, very comfortable compared to many others, mainly because they are generally doing not the type of advance which is JLR, but they are doing the SHG portfolio. So they are also doing well. Probably the assets under management will grow, and we will be putting more money as and when they need also.
And what about your lending rate? Would you be looking to bring it down as the cost of funds has come down substantially in this quarter?
Yeah, because we are now trying to put in newer, we are trying to mix the assets probably by starting newer schemes with lower interest. Not everybody's interest, but some schemes with low interest. So we also always have interest rates ranging from 12% to 22%. So sometimes we tweak the mix so that we give little more focus on the lower interest. But there should be one point to be noted. The customers which are generally 30,000, 25,000, they are not that interest sensitive by saying that if we reduce the interest, the pickup will go up. They are more concerned when the loan amounts are very big, maybe a 10 lakh loan, etc. For that, actually, we have now come up with a low interest scheme of 12% for loans above 10 lakhs. That's why we can afford to give that at 12% because it's a big loan.
And so my last question to you is, how will you summarize this quarter's performance in one line?
Yeah, this has been a good quarter where the interest collections have shown an uptick, and also the cost of borrowing has come down. This has actually resulted in the final PAT and PBT going up maybe by about 50%.
So, well, that was the management of Muthoot Finance, very confident about reducing their provisions and improving their asset quality next quarter, Agam. So, over to you.
Yeah, absolutely. It looks like a good quarter, and that's apparent in the stock as well. But it's not just Muthoot Finance. There are plenty of other earnings that we will be tracking for you in terms of the way they pan out, along with the analysis. But that's it for now. Signing up, but we will be back in a bit. So stay tuned in BloombergQuint.